So we want to begin tonight with the situation between the U.S. and Iran, and with rising tensions in the Middle East after U.S. airstrike in Iraq killed a top Iranian army commander last Friday. There are concerns developments could trigger a surge in global crude oil prices. Already, oil prices have shot up more than 2% higher on Monday, with Brent crude rising above $70 a barrel. Assessing this impact on African economies like Ghana, economist Dr. Buteksen said the U.S.-Iran feud will not have a direct impact on domestic fuel prices in the short to medium term.
Export of oil, so if the prices go up, it's good for us, right? But also, we also will find out that it will lead to an increase in fuel prices in Ghana. So you want to find out whether the revenue that will come in from the increase in oil prices would bring in more revenue to governments. Then we also pay more for the fuel. But I don't think it's going to lead to a substantial increase in the world oil prices. We have to wait until we know what Iran is up to. We should move away from the stage where government was subsidizing almost everything, including fuel. We need to move to the point where we pay for fuel as it should be paid for. It's unfortunate that we don't have control over the world prices, but then in terms of the depreciation of the currency, it's 13%, not too bad in terms of the increase in the fuel prices. I don't think that for the whole year, 13% would lead to that increase, because we've already increased it not long ago because of the depreciation. So the city has slowed down. So let's wait and see what happens. But I'm not looking at the oil dynamics at all.
Should the government say hooray? Because you just mentioned it. You said we're a net exporter. And they definitely have made some projections in terms of what they hope to realize from crude oil sale on the international market.
No, the government will not necessarily be happy because it's an election year, don't forget. They don't want the fuel prices to increase, even though they have no hand in it. So now when the fuel prices go up, Ghanaians will begin to complain, because we've known that in the past, government has had a hand in the determination of fuel prices. Not many people are aware that it's now out of government hands. So government will not be entirely happy about it. Yet, yes, if it comes with some more revenue to block some of their holes, they'll be happy about it. So it's a mixed feeling. But I'm saying that I don't expect it to have a huge impact in terms of world oil prices. It's just the body language that is going on. I'll strike 52, you strike this. I don't think that Iran even is going to react in a way that might necessarily happen in the immediate future. They said they are going to do it at their own time and when they think it's appropriate. So let's see what happens. And I do expect it to have an impact on oil prices to the extent that Ghanaians will have to pay higher prices for. If anything else is going to come for a depreciation of the currency.
I say, even at the time we know that sentiments alone, public sentiments, can trigger an increase in these things in terms of prices we have on the market. And is that not the reason why people should be worried?
Yeah, we should. I mean, but I'm saying that if we fall expectations into that, I begin to, don't forget that inflation itself can be created out of some of these things. So people are expecting, the fuel price will go up, so let me start increasing the price of my goods. That's why I'm saying that let us tone down the expectations to the extent to which oil prices will increase, so that we don't further expectations into inflation. Because we are doing well with our inflation, we need to be very mindful about the extent to which we use our own expectations to inch up the prices. So I'm saying that, yes, if it will have an impact, I'm not expecting the impact to be that significant to have an impact on domestic prices. And I'm saying that we should be very careful about this.
All right, so analysts are predicting Iran will target shipping in the Strait of Hormuz, which is responsible for a fifth of the world's oil supply flow. If the strait is blocked, even for a short period, it will lead to prices skyrocketing at between 70 to 80 dollars a barrel. The global economy is not likely to feel much impact from this rise in prices. But as we get closer to the $100 mark, there will be severe consequences, which could trigger steep sell-offs in equity markets. International analyst on CNBC, Andy Lippo, says closing the strait is a possible action that Iran may take in retaliation to the recent U.S. airstrike that killed the top Iranian general.
Well, you're absolutely right. Back in September, when the Abqaiq facilities were attacked, we had lost 5 million barrels a day of oil production. We didn't know when it was going to come back. Oil prices rose $8 a barrel. We've already risen half that much, and we haven't had a supply disruption as yet. But the war of words is really getting heated over there, and the market does not like what it sees. As Tanvir pointed out Iranian oil exports are really down to almost zero. So Iran could take the action to make life miserable for the rest of the world, take out a significant amount of oil production capacity, not only in Saudi Arabia, but perhaps the Emirates and Kuwait, and perhaps leave Iraqi oil production alone, as there isn't a relationship there between Iran and Iraq. So they are conscious that higher gasoline prices work to President Trump's disadvantage, but I think they're also respectful of that they do have this relationship with Iraq and influence there.
Sure. Andy, just quickly, when you mentioned that a closure of the Straits of Hormuz would send oil to $100 a barrel, I mean, how likely do you think that is? Because we are seeing more reinforcements, if you will, sent there. We're seeing the defenses really bolstered. So shouldn't they be able to prevent this?
Well, I give it low probability. The closure of the Straits has been threatened for decades. We haven't seen it happen. But if the oil market should see like a VLCC tanker on fire, in the middle of the Straits, of course, prices would react, go upwards about $8 a barrel. And then their thinking would be it could potentially happen, but I don't think the closure would be long-lived.
As we've been reporting, analysts expect Brent crude prices to top $70 and predict that if Iraq's production takes a hit, oil prices may spike even higher. Investors are said to be moving into gold and other safer haven investments as tensions in the Middle East continues. But how is the situation in the Middle East affecting global stock markets, and what is the potential impact on the local market? Joining us very soon will be head of research at Databank, Alex Boahin. But I want you to take a look at what's happening on the markets right now. As you can see from the chart on your screen, that's for Brent crude. We see that it is dipping slightly, going down after it spiked further. And so that's what's happening. I think it's hovering around $69, a little over $69. That's how it's looking like right now. Earlier in the day, it was around $70 a barrel. So that's what's is looking like on the market. So let's speak with analyst at Databank, Alex Boahin. You've been monitoring what's happening on the markets in the Gulf, in the US, in Asia as well. Tell us more about the response of the market in times like these.
Thank you, and good evening to your listeners. I mean, in an environment or in a market like this, when you see uncertainties, in fact, what equity investors don't really like is uncertainty. Because once there is uncertainty, then they begin to move their money from the equity market to safe haven, that is like fixed income or even in gold. So that could potentially impact the equity market globally. And that is actually a killjoy, to global equity markets, because if you look at last year was a fantastic year for global equities. If you look at the US, if you look at London, most world leading stock market actually recorded very good gains. If you look at our part of the world, like in the sub-Saharan Africa, market performance was not that great. It was a very difficult year in 2019 for African equities. Where out of the equity market that we track in Africa, only 5, led by Kenya, actually managed to put or to report some moderate gains. But this issue, as it happened, last year, this morning, we saw equities actually dropping quite significantly across the globe. But the point is that what investors actually fear is uncertainty. And once we see this development on the global markets, surely you should see equity taking a hit. But if you look at petroleum stocks or energy stocks, some energy stocks might actually make some gains out of this, because crude oil prices are their main revenues. When crude oil prices are higher, they tend to rake in more revenue. So if you look at a company like Tullow, if crude oil prices go up, that could potentially have positive impact on their share price.
And that's a major disappointment because towards the end of the year, we saw global stocks rally with hopes of a deal between the U.S. and China. And now this happens. But let's come home to Ghana because there was a debate in our newsroom as to whether or not this has any direct impact on the stock market here. Countries like Ghana, should we be concerned about this? Are we going to take a hit?
Yes, because there is interlinkages between stock markets, because obviously if you look at our market, historically you are talking about something around 60 to 70% dominated by foreign investors. So foreign investors actually account for about 60 to 70%, and these are investors who sit in London and New York and South Africa and other developed markets. So they look at Africa with some sort of they look at Africa with some sort of perception. Risks like this will actually make them move their money from Ghana into other equities. And we saw that last year, where U.S. market did about 30% in terms of return. And that actually reflected in our market because we saw a lot of sell-off from our market, investors moving away from our equity market into advanced market. So obviously, though one can argue it's quite remote, but it has significant impact on our market, to be frank.
So if I was an investor here in Ghana, what would you advise really? Because you say people are investing in safer havens like gold. Meanwhile, we are seeing that crude oil prices are going up.
Sure. I think that for now, in the short term, no need to panic. The Ghana Stock Exchange is looking great in terms of share prices, valuation. You can see that share prices are very low because even though companies are making profits, share prices were stagnant generally in 2018. Last year, 2019, we saw a decline of about 12.2%. So that has made the market quite attractive because what we say, valuation is very low. Companies, especially the banking sector, is looking very attractive as most banks are trading below their book value. So if you look at it, there's a lot of value in our market that can be unlocked compared to the advanced market, and that could possibly sort of help sustain some interest in our market. So for these short-term spikes, for me, I think that investors should be calm and let's see how things actually develop.
You say investors should be calm, but there is this uncertainty that you even spoke about because we don't know what is going to happen eventually, whether or not Iran is going to retaliate and the U.S. is going to strike back. People are even talking about the World War III. How do you expect global markets to, I mean, that's an exaggeration, but how do you expect global markets to react to these developments, especially when we continue to witness some provocative tweets from the U.S. president?
Yeah, I mean, that is the game. I mean, the equity market is about risks, So because, I mean, sometimes the uncertainties actually brings opportunities in the market because, I mean, that is why it is equity. That's why it is stocks, because it fluctuates, the price fluctuates every now and then because of uncertainties. But in our side of the equation, if you look at as the gentleman earlier said, a major driver of sentiment on the market is the currency stability. So once the currency begins to shake, you see a lot of panic, especially that on the stock market or the capital market as a whole. The government intend to move swiftly to assuage any potential spikes in the value of the cedi, and that could possibly be positive for the stock market. Another thing to look at is bond yields.
Okay.
Yeah. So once you see, for instance, last year we saw yields actually going up quite significantly, and that also sort of impacts the stock market because then you see a lot of investors moving from the stock market into the bond market, and that could possibly impact the stock market. But
Thank you. I'm sorry, we are running out of time. I appreciate your thoughts tonight. Very insightful there. Head of Research at Databank, Alex Boahing, for giving us perspective to this developing story that's got everybody's attention. Thank you very much indeed. In other news tonight, the Ghana Revenue Authority has exceeded its revenue target for 2019, which was more than 43 billion cedis. Government revised the revenue target from 46 billion cedis to a little over 43 billion during the mid-year budget review as a result of some policies introduced at the ports. Speaking on the Super Morning Show, a board chairman of the Ghana Revenue Authority, Professor Stephen Adai, disclosed that the target was exceeded as at the end of December. Here's more in this report. The Ghana Revenue Authority failed to meet its revenue target for 2018 because huge consignment of goods were diverted to other ports as well as other infractions that occurred at the ports. According to the board chairman of the GRA, Professor Stephen Adai, the target has been marginally exceeded after collecting more than 5 billion cedis in December 2019. He attributed the situation to an increase in collection during the last quarter of the year.
It will interest you to note that in December, we more than met our target in revenue collection. And so we hope that good things are going to happen.
How much did we collect?
Actually, I'm having a board meeting because every day they have to calibrate. The last time was about 5.6 billion.
For December?
Yes. In fact, while we were looking for about 5 billion. So the target in January was about 46 billion.
Yeah.
But you know, the government changed the benchmark rates at the port. So it was revised to a level over 43 billion. And we have slightly exceeded that.
Slightly exceeded the target of 43 billion when it comes to revenue collection.
Yes.
On the fire incident at the GRA office near the Kwame Nkrumah interchange here in Accra, Professor Stephen Adai said they have begun full operations for the medium taxpayer office in its newly acquired facility at a much lower rate whilst awaiting a full report on the outbreak.
A lot of physical damage to the first and the second floor probably will require just probably knocking it off, but we haven't got the full report. But what we have done is that we have moved totally our operations to the Stanchart headquarters and branch there, which were fortunately empty because they had moved to their big office. And I want to appreciate Stanchart for offering it at a good rate, not free, because...
How much?
I think that they gave to us about $9 equivalent per square meter, which is about half what is prevailing in the high street.
The government is projecting about 68.8 billion cedis as revenue target by the end of the year 2020. Beniza Sabute's report for Joy Business. The HARMATTAN season is here with the potential of more fire outbreaks. Now, major stakeholders, including the Ghana National Fire Service and the National Insurance Commissioner, calling for intensified surveillance, especially around market centers, which are prone to fires during the HARMATTAN season. Charles Aite has been assessing the preparedness of market operators against possible fire outbreaks and now reports.
Of January, and we've revisited this particular market this time around to find out from market women and men and of course authorities how prepared they are against a recurrence of fire disasters within the market centers.
Market centers have always been at the receiving end. The Ghana National Fire Service recorded a total of over 113 market fires across the country. The Odona Pedestrian Mall here at the Kwame Nkrumah Circle in Accra is noted to be very prone to fire outbreaks. Last year alone, parts of the pedestrian mall was raged down 3 times by fire. Madam Safo is a seamstress and victim of the market fire in 2019. She narrates how traders like herself are exposed to market fires.
Every day somebody will come. Okay, a new person will come to the market or want to have a shed. After they have given the shed to the person, I need a light. So when you need the light, by all means you have to get electrician to come and then connect something. So by all means they will connect someone's own in addition to yours. Then you see that there will be some implications.
By problem,
and as Mensa Aito is the chairman for the Odona market, he says surveillance has been intensified, with all shop owners being requested to own a fire extinguisher or risk having their shops closed.
By 2020, all of them may be chairman. So if we assume this one, only one shop for the market. By 2020, if you no use for this one, so we unlock your shop.
Whenever it comes to market fires, issues regarding illegal electrification, overcrowding, cooking are often highlighted. But what about insurance? Madam Safo tells me traders barely consider the need to insure their properties. Chairman for the Odona market, and as Mensa Aito has also lamented the low penetration rate of insurance companies in market centers.
If you tell me, say, that problem is market, is the big problem.
And there's more business news coming up on JoyNews Prime in about 2 hours' time. That's it for Business Live tonight. More news on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching.